Hello traders, welcome to the third module of the Advanced Technical Analysis course, Chart Patterns. In this lesson we're going to teach you how to trade flags, which are continuation patterns. We're going to teach you how to trade them, where to put your stop losses, and how to calculate your targets using price action. Alright, so we already know that flags are continuation patterns, so we trade the breakout of the pattern. A flag is a consolidation period during a strong move. Remember that flags are found in the middle of up moves or down moves. The right way to trade a flag is to wait for the breakout in the direction of the move. Here's an example. As you can see on this example, we are moving up, then we consolidate inside a flag, and then we wait for the breakout of this flag to trade a long position here because we are in an up move. If we were in a down move, we would trade the breakout to the downside. Now, where to put our stop losses? When we have a breakout and an entry, the stop loss should be below the flag support in a bullish move. And in a bearish move, the stop losses should go above the flag's resistance. And here's an example of a bullish breakout of a flag. We have the strong move to the upside. Then we consolidate inside a flag, and we decided that we are going to wait for the breakout of the flag to trade the long entry and the continuation of the trend. So when we have the breakout, our stop loss level should be below this low or below the flag's support, because if price goes against us and breaks this low, our trade idea is no longer valid and we should be out. For instance, to put our stop loss right below the entry is too much of a tight stop loss for a pattern this wide. Your stop loss should give your trade a little air to breathe, and of course should be at a level that invalidates your trade idea. So when you are trading a flag, you are going to put your stop loss below the flag support on a bullish position, and if we were trading a bearish breakout on a bearish flag, our stop loss should be above the flag's resistance. Now the targets. When calculating a flag's breakout target, you should measure the pole of the pattern, and the pole of the pattern is the previous directional move. This is the previous directional move. This is the pole of the pattern, and this is the flag. When you have the measurement in pips, you should extrapolate it to the breakout zone. And here's how you do it. We already measured from this low to this high. We don't measure to this high because this is where the flag begins. So we are only measuring the pole of the complete pattern. When we have a measurement here, we just extrapolate it to the breakout zone and put our targets at the same distance as this low was from this high. So a complete trade on a flag should be this way. We have the pole of the flag, then the consolidation period, then the breakout. When we have the breakout, we put our stop loss below the flag support, and we put our targets or our exit area at the same distance that this low is from this high. Now let's go to a trade analysis or an example of a trade with a flag. Here we are in an up move. As you can see, we started at this low and we are now at this high. And we start to consolidate on the opposite side of the move. This is the flag. The first thing we're going to do is we're going to actually draw lines to better see the actual breakout area that we are looking for. Then we're going to measure this low to this high to find our target areas. In this case, we have a 75 pip move before we start to consolidate inside a flag. So we grab our possible breakout area, and we extrapolate 75 pips to the upside, and we find a target right here on this area. Now we wait for the breakout, and when we have a breakout, we trade on the bullish side, or we go long with our stop losses below this low or below the flag support. And as you can see here, even though we failed to go up to 75 pips on the first part of the move, after a correction to the downside, we hit our targets. And this is how you trade flags. And as you can see, trading patterns is not as straightforward as you would think. You have to actually measure the moves. You have to actually know where to put your stop losses and where you have to pick your entries.